Welcome to Kunal Bothra and Gaurang Shah. Welcome to the both of you, and thank you so much for taking the time. Good morning, Kunal. How are you looking at the expiry day, and also what are your high risk and low risk ideas for the day?
So, good morning, Alex. I think it's a bit of a, I would say, an iffy start for the index. Expectation was that the markets would carry forward a lot of the chunk of the large cap move, which we had seen yesterday. But it seems a bit of an off day because you have new set of stocks, for the indices which are moving up higher, new set of large cap names which are moving up higher. So there is not much of a follow through price action on individual names, especially the ones which had done pretty well yesterday. So I think in that aspect, possible that the index may remain in a bit of a range. For the short term, I believe 15,100 should now act as a very strong support for the Nifty. And I think likewise for the Bank Nifty, it should be around 35,500, 35,700. That should be a good enough support zone for Bank Nifty. Now, I would suggest a couple of buy calls, but as I said, that the theme is a bit offbeat, where new set of stocks are emerging as breakout candidates. So I would consider two buy calls. One of them is about Muthoot Finance. Now, interestingly, the stock has managed to give a breakout on the short-term charts. It's looking very attractive. Gold, I think, apparently on the gold as an asset class, apparently on the medium-term time scale has hit back to many major of its oversold territories. So I'm expecting some relief rally to come into this asset class as well. And of course, Muthoot Finance could probably benefit from that rally as well. So I would expect a decent rally from current levels on the stock. Would suggest a buy with a target of 1400 approximately on Muthoot Finance, and stop loss could be kept at 1250 mark. The second is a buy on Apollo Hospital. Again, with the same theme that many of these stocks which are going through a bit of a downward drift, they could find a short-term bottom in place. Apollo Hospital as well is trying to bounce back again from its 50-day moving average. Yesterday also you saw some resilience and some support building up from 2850 levels for Apollo Hospital. So I would expect that the stock, if it holds on to this support of 26 in 2850 levels, it could climb back to 3000, 3050 zone. So a contra buy on Apollo Hospital as well, targets of 3050 approximately, and stop us at 2850 levels.
Okay, Gaurang, what are your picks for our viewers for the day?
Thank you and morning to all of you all. So Karanya, I think prudent to stick with known names with earning visibility, and our sense at Geojit is that IT and Pharma will continue to be in the spotlight, and purely going by the third quarter earnings, and along with that, Karanya, the commentary or the verbatim that was shared by the two big boys in the IT large cap universe, that is Infosys and TCS. We believe that there is a lot of upside left with earning visibility and the strong verbatim that was given out by the management. So TCS is the first one with a target of 3650 to 3700, and the second one is Infosys by default, targeting somewhere close to about 1600 plus with a long-term time horizon. And I think Karanya, the dips or the corrections, whatever we have seen over the last 6-8 months, I think those have been proven out to be great investment opportunity with long-term fundamental strong earning visible companies. And that's what is reflected. Last 6 to 8 months, all dips have been bought into, and that's what reflected from the week gone by. So I think what I would like to advise viewers or investors is that you may get corrections, but those are great investment opportunities.
Gaurang, thanks so much for those views. Do stay with us, Gaurang and Kunal. We're just getting a view from a market veteran, Nitin Lalpuria. We spoke to him just a short while back, and he believes that consumption is largely driven by a large cap listed consumer companies, and that is the sector that you will have to watch out for as vaccination picks up pace and as the market opens up again. Listen in to what he had to say to us.
The last couple of decades has been driven by some of the large cap consumer companies which are listed. What you see in the last few years is many of the small companies coming in offering a much better product or services, and be able to engage as a brand with the consumer more intimately, and that is what we are seeing sort of play out in a significant manner, right? So when a typical consumer looks to purchase, they want to buy products that they can connect to. They want to buy products of the brand where the brand speaks to them, and then there is a healthy sort of exchange between the two. And this is something which is a bit unsustainable for very large companies to do, given their own structures and the wide distribution.
Okay, on that note, we're slipping into a short break. When we come back, we'll address all our viewer queries. Stay tuned.